Hello everyone, this is Ross with Market Traders Daily, and this is today's video analysis for March 11, 2020. Today we're looking at the USDJPY, the US dollar, versus Japanese yen for today's trade analysis. We're starting all the way out here on the weekly time frame. I think we need to get a perspective of where the current price is within history for the dollar yen. I've circled three important areas right around the blue shaded area, which is 104.85, 104.65. Look back in the past. There's three distinct times where the market came down, challenged this mid to upper 104 level, the blue shaded area, completely reversed and went back in the other direction, creating a period of uptrend for the dollar yen. It happened three times back here in the past. We are currently in that same area. Now, we've seen a little bit of course, different volatility and different price action over the past week or so because of market volatility. We've seen the market spike all the way down into the 101.40 level, down here at the bottom of this long wick that sticks down here. And then it suddenly rebounded. Guess where? Back to the blue shaded area. So right around this blue zone, what we're looking for is some evidence that it's either going to, and let's put a couple of arrows here, break back above and begin reversal to go back up like it has three times in the past, or will it stay underneath here and change the history and we look for it to continue to go lower? So we're searching for information around that blue shaded area, 104.8565. What's going to happen here? Will it stay underneath it, go lower? Will it break back above it and go back up? I will point out, of course, the current weekly candle is that smaller blue body. It does have a little bit of a wick on top and a very long wick on the bottom. The last time we saw a very long wick on the bottom of a candle was this middle blue circle, and it went up for a period of time. And when I say a period of time, it went up about 400 pips from the close of that red candle, that one with the wick on the bottom of it. So I'm not saying we're going to go up 400 pips now. I'm saying the last time we saw a wick here, we saw a significant retracement and correction back higher again. So let's keep that in mind as well. Take it down here to the daily time frame. Of course, those two candles right there are what created that long wick, the sell-off, and then the sudden rally. Take a look at today's candle. Sitting on top of, guess what? That blue shaded area, 104.8565, we're sitting on top of that as support today. So again, we've known from history that above that blue zone, potential support and the potential for it to go back up. And only really if it gets underneath it do we look for the market to continue to go down. So this becomes an interesting area. Above there, we may look for opportunities to shift back higher again. Break the yellow zone, we look for a continuation of the uptrend. Back underneath 104.65, we target lower levels. Maybe the orange zone, maybe the green zone on the way down. 4-hour time frame doesn't really give us much help, but as we get down here, guess where we're finding our congestion, our consolidation here. You know, if you think about something like this right here and something like this right here, we're in that area that's culminating right there around our blue shaded area, the one that we started looking at on the weekly time frame. So it's either going to stay here above the blue zone, maybe a dip back to the orange zone, start going back up from here, or I think if we break the orange zone, that's the key player. It's going to go lower from there. You know, let's look at it in a different way. Take these red lines off, and let's put a little bit of a box here. So we're in somewhat of a period of ranging, congestion, consolidation, whatever you want to call it. We're in this period right now where the market's trying to figure it out, aren't we? Inside this black box, we're somewhat in a period of congestion, ranging there. So in the blue zone, smack in the middle of that box. So I would say the closest possible to the blue zone or the orange zone may be your opportunities to go long. A break of the blue zone, of course, we've really just challenged the orange zone. Break of the orange zone, we look to go lower. And of course, a break of the yellow zone above there, I think we look for further movement higher. The best case scenario, I think, for lowest risk, highest reward, we're trading near the yellow and the orange zone. as our areas to look for the lowest risk. What's the stop loss right now? If we're selling, your stop loss is above the yellow zone. If you're buying, your stop loss is below the orange zone. So really, for the lowest risk, highest reward opportunity, you're trading near the extremes, the outer limits of our congestion consolidation, the black box, the yellow and the orange zone. Could you have an opportunity here into the blue zone today to take a little bit of a trade? Sure, there could be a possibility, but I think as close as possible to the outer ranges there may give us the lowest risk, even if we're buying because of the support at the blue zone or selling because of resistance at the yellow zone. Those will give us our lowest risk opportunities for the day on the dollar yen.
From Forex Traders Daily, this has been your daily analysis with Ross Mullins. If you would like to get Ross's analysis on all the currency pairs he's watching and all the trades he takes today, join him in his live trade room by clicking on the link below. Please leave any comments you have about today's video in the comments section below.